It was 2023, and Ajit Jain stood on the precipice of a $1 billion decision. In the vast boardroom of Berkshire Hathaway, the soft hum of air conditioning did little to cut through the tension. Outside, the Nebraska sky was calm, but inside the room, a storm was brewing. Hurricane season loomed over Florida, and with it came a risk of catastrophic damage. The stakes? A potential $15 billion loss for Berkshire Hathaway if the worst occurred. The room was quiet, and the weight of the decision pressing down on everyone present. Jain's face remained impassive, his eyes scanning the numbers in front of him with the focus of a surgeon preparing for a high-stakes operation. He could feel the intensity of the room, the subtle glances exchanged by his colleagues. But Jain, as he had done for decades, remained calm, his mind working through the calculations with surgical precision. Finally, he looked up, his voice steady but firm. "We can take the risk," he said, breaking the silence. There was a momentary pause, and then Warren Buffett, seated at the head of the table, nodded, with a slight smile. "Go for it, Ajit," he replied, not hesitating for even a second. With that, the gamble had begun. For those who are unfamiliar with him, Ajit Jain isn't just a household name, but within the world of finance, he is a titan. As a vice chairman of Berkshire Hathaway's insurance operations, Jain oversees a business that provides the financial backbone for Warren Buffett's empire. With over 3 decades of experience at Berkshire Hathaway, Jain's mastery of risk and reward has created billions in value for the company. He is the man Buffett once said he would swap himself for if necessary, a statement that highlights just how indispensable Jain is to one of the largest and most successful companies in the world today. Ajit Jain was born in 1951 in Odisha, India, a region in the midst of societal transformation following India's independence in 1947. Odisha, largely agrarian and underdeveloped at the time, was undergoing significant socio-economic change, striving to balance modernization with traditional Indian values. Jain's family, being deeply involved in government service, was a part of the social fabric shaping this transformation. His father's role in the Indian Administrative Service, or IAS, imbued in Jain with values that would guide him throughout his life: discipline, integrity, humility, and an enduring sense of responsibility. In Odisha, families like Jain prioritized education, intellectual growth, and community service, seeing it as their duty to contribute to the country's development. This focus on education was particularly strong in the post-colonial era, where academic excellence was viewed as a path to securing both personal success and the nation's progress. This structure also emphasized respect for elders, discipline, and the ability to navigate life's challenges with grace and perseverance. It was in this environment that Ajit Jain's moral compass was shaped. He grew up with a strong sense of personal duty to lead through integrity and excellence, qualities that would later become evident in his leadership at Berkshire Hathaway. Jain's early education began at the Stuart School in Cuttack, a premier education institute where he quickly distinguished himself as a gifted student. Known for his quiet determination and intellectual curiosity, Jain excelled academically, developing a reputation as a hard worker who approached every challenge with a calm but focused demeanor. The strong academic foundation paved the way for him to enter the prestigious Indian Institute of Technology, one of the top engineering institutions in the country. At IIT, Jain pursued a degree in mechanical engineering, a field that was at the forefront of India's push towards industrialization in the 1970s. The culture at IIT emphasized rigor, logic, and problem solving, which trained students to approach problems methodically. Jain thrived in this environment, gaining the analytical skills and intellectual discipline that would become the backbone of his future success. Graduating in 1972, Jain's academic journey at IIT not only shaped his technical skills but also broadened his mindset, preparing him to face challenges beyond the world of engineering. However, The conventional path of engineering did not hold his interest for long. After a brief stint at IBM India, where he worked as a salesman in the data processing division, Jain realized that his future lay in business rather than in engineering. His time at IBM introduced him to the nuances of corporate strategy and negotiation, key skills that would later become crucial in his role at Berkshire Hathaway. When IBM exited India in the late 1970s due to the restrictive government policies, Jain took the opportunity to shift gears dramatically. He enrolled at Harvard Business School. Harvard was a pivotal moment in Jain's life. Harvard Business School's focus on case study-driven learning exposed Jain to the complexities of international business, leadership, and decision-making under pressure. It wasn't just about numbers or technical expertise. It was about understanding the human elements of business, leadership, and decision-making in an ambiguous environment, and the importance of long-term thinking. Surrounded by some of the brightest minds in global finance, Jain honed his ability to navigate complex financial landscapes. Harvard's rigorous curriculum also helped him build a strategic mindset, allowing him to think beyond the immediate gains and focus on long-term growth, a skill that would prove invaluable at Berkshire. Reflecting on his time at Harvard, Jain once remarked, "It wasn't just about learning the rules of business, it was about learning how to think strategically and how to act decisively." After completing his education from Harvard, Jain joined McKinsey & Co., a global consulting powerhouse known for its ability to shape corporate strategy. At McKinsey, Jain thrived in the data-driven analytical environment, working on projects that required him to solve complex problems for some of the world's largest companies. He worked on strategic decision-making, corporate restructuring, and risk management, which helped hone his problem-solving abilities. The McKinsey culture of a dispassionate analysis and the focus on execution influenced Jain deeply. Here, he developed the tools and the frameworks that would later become the foundation of his success at Berkshire Hathaway. During his time at McKinsey, Jain distinguished himself as a consultant who could navigate uncertainty with a calm precision. He approached each business problem with meticulous attention to detail, analyzing risks and opportunities from every single angle. His strategic mindset allowed him to recommend decisions that were not only sound in theory but also executable in practice. This pragmatic approach to business impressed his colleagues and caught the attention of Michael Goldberg, his mentor and boss at McKinsey at the time. Michael Goldberg played a critical role in shaping Jain's career trajectory. As a senior executive who had transitioned from McKinsey to Berkshire Hathaway, Goldberg recognized in Jain the qualities that would thrive under Warren Buffett's mentorship. Jain's methodical approach to risk, his humility, and intellectual sharpness stood out to Goldberg, who believed that Jain's skill set was perfectly suited to the risk-laden environment at Berkshire Hathaway. In 1986, Goldberg introduced Jain to Warren Buffett, a meeting that would change the course of Jain's career. It wasn't just a casual recommendation. It was the result of Goldberg's keen observation of Jain's ability to navigate complex decisions and to manage uncertainty. Goldberg's trust in Jain's potential to succeed at Berkshire paved the way for Jain to take on one of the most challenging roles in the insurance industry. When Jain first entered Buffett's modest office in Omaha, he was stepping into the heart of Berkshire Hathaway's decision-making engine. The office was famously simple, no unnecessary frills, just stacks of papers, books, and financial reports. Despite the understated decor, there was an air of gravity and intellectual curiosity that defined the space. This was where Warren Buffett, one of the world's greatest investors, made decisions that shaped global markets. Buffett's first question to Jain was direct. "What's your experience with insurance?" Jain, ever candid in his response, replied, "None." Buffett's response was "Nobody is perfect," was both a joke and a reflection of his belief in Jain's potential. For Buffett, it wasn't Jain's lack of experience in insurance that mattered. It was his intellect, honesty, and his strategic acumen that set him apart. Shortly after hiring Jain, Buffett made a personal phone call to Jain's father in India, humorously telling him, "If you have any other son like this, send him over and we'll own the world." This gesture wasn't just a light-hearted compliment. It was Buffett's acknowledgement of Jain's brilliance and his conviction that Jain would play a pivotal role in Berkshire Hathaway's future. Jain's entry into the insurance world was a leap of faith, as he had no prior experience in the industry. However, under Buffett's mentorship, he quickly immersed himself in the complexities of reinsurance, a field many consider too volatile and risky. Reinsurance involves taking on the risks that insurance companies are unwilling to bear alone, particularly high-stakes risks such as natural disasters or long-term liabilities like asbestos claims. Jain, with his methodical approach, saw opportunity where others saw danger. One of Jain's defining moments came in 2006, when he negotiated a $7 billion deal with Lloyd's of London, taking over a massive volume of asbestos liabilities. The unpredictable nature of asbestos claims had driven many insurers away, but Jain recognized that with the right pricing and risk management, the deal could prove incredibly profitable for Berkshire Hathaway. His ability to assess complex risks and structure deals that maximize returns while mitigating unnecessary exposure solidified his reputation as a master risk manager. Another landmark deal was the reinsurance of the Sears Tower, a high-profile transaction that many insurers deemed too risky. Jain's ability to evaluate and price complex risks allowed Berkshire to step into these deals with confidence, while others hesitated. His knack for identifying profitable risks in seemingly dangerous markets allowed Berkshire's reinsurance division to thrive even as others struggled. Jain's decision-making philosophy centered around restraint and understanding the downside has been tested time and time again throughout his tenure at Berkshire. One of the clearest examples of this philosophy in action was his handling of the Florida hurricane risks. Florida's exposure to hurricanes presents massive potential liabilities for insurers, and while most companies sought to limit their exposure, Jain saw an opportunity to increase Berkshire's stake in the market. This decision wasn't made lightly. It came after Jain meticulously calculated the odds and determined that the potential reward far outweighed the risks. His calm demeanor during high-pressure situations reassured Buffett and other executives at Berkshire, further solidifying his reputation as a master risk manager. Another instance was the $7 billion Lloyd's of London asbestos deal. While most companies were reluctant to touch long-term asbestos liabilities due to their unpredictable nature, Jain dove deep into the financials, analyzing historical data and future projections. He saw an opportunity where others saw risk, showcasing his unique ability to balance risk with opportunity. One of Warren Buffett's often repeated phrases for Jain is that he excels at avoiding dumb decisions. This mindset is reflected in Jain's ability to walk away from deals that might seem lucrative on the surface but don't align with long-term strategic goals at Berkshire. For instance, there were times where Jain passed on deals involving complex liabilities that didn't provide the right compensation for risk involved. He understood that not all risks were worth taking, and that it's often the deals you don't make that defines your success in the long run. His collaborative leadership style also plays a role in his ability to avoid missteps. Jain is known for creating an environment of open dialogue with his teams, encouraging feedback and thorough analysis before making financial decisions. His culture of shared responsibility ensures that decisions are well considered and backed by solid data. In 2018, Ajit Jain was promoted to Vice Chairman of Berkshire Hathaway, a role that expanded his influence over the company's entire insurance division. His contributions continued to grow, especially as Berkshire faced an evolving landscape of global risks. While Greg Abel was eventually selected as the future CEO, many industry insiders believed that Jain could have taken the role if he really wanted it. Buffett's trust in Jain remains unwavering, while Buffett stating that Jain's strategic decisions would continue to drive Berkshire's success long after he has stepped out from active management. Even after the CEO succession announcement in 2021, Jain remains a pivotal figure at Berkshire. His ability to manage billions in risk with a steady hand made him indispensable particularly in sectors like reinsurance, where the stakes are incredibly high. Berkshire's insurance float, much of which Jain was responsible for growing, continued to serve as a financial backbone, providing the liquidity Buffett used to make massive investments in other industries, from technology to consumer goods. As Jain nears the latter stages of his career, there is a growing speculation about who will succeed him in managing Berkshire's insurance empire. Amongst the names mentioned are Peter Eastwood, head of Berkshire Hathaway Specialty Insurance, and Charlie Shamia, chair of Gen Re. Both men have been mentored under Jain and possess the skills necessary to navigate the complex world of reinsurance. However, whoever steps in Jain's role will face a daunting task of living up to his legacy, one defined by calculated risk-taking, strategic foresight, and unwavering discipline. Beyond the financial figures, Jain's true legacy at Berkshire lies in his cultural impact, as he had on the company. His emphasis on humility, discipline, and long-term thinking has become embedded in Berkshire's DNA. As the world of insurance becomes even more complex, with risks such as climate change and geopolitical uncertainty on the horizon, Jain's strategic approach will serve as a guiding light for the next generation of Berkshire Hathaway's leaders. Ajit Jain's story is one of humility, discipline, and an unwavering commitment to doing the right thing, whether it's for his family, his colleagues, or his shareholders. From his early days in Odisha, where he learned the values of integrity and hard work from his father, to the boardrooms of Berkshire Hathaway, where he navigated billions in risk with calm precision, Jain has consistently demonstrated that success is not about avoiding risk, but understanding them deeply and making the right decisions at the right time. Buffett's famous remark to Jain's father, "If you have another son like this, send him over," may even be said in jest, but it speaks volumes about the respect and admiration Buffett holds for Jain. Over the years, Jain has proven that he's not just a brilliant businessman, but a thoughtful, strategic leader whose influence will endure long after he steps away from the boardroom. As Berkshire Hathaway moves into a new era, Ajit Jain's legacy will continue to shape its future. His story is not just one of billions made, it is a story of mastering risk and balancing reward, and most importantly, knowing when to take a leap and when to walk away.